Welcome to Java. Thank you kindly for joining me. It is January 10th, 2024. It is Friday, which is kind of like Monday because yesterday the markets were closed in observance of President Carter's funeral. So, with this, we've got a lot to go over. Now, we had great discussions both Wednesday night as well as last night on cryptocurrencies. If you haven't yet, you might want to consider joining us in the discourse for that because we keep up to date on things a little bit more and have a great, fantastic community there. So, with this, there's a lot to cover today. Let's get started with the markets. MMRI at 318.7, extreme territory. Now, still the relative strength of the dollar above 109, 109.18, and the 10-year yield still approaching that 5% mark that is acting as a wrecking ball globally for other markets. Now, we've got the fear greed index is currently 32. We'll see how this affects that. So this morning is all about the jobs reports in short. Now, going to cryptocurrency really quickly, we had Bitcoin had a drop. And by drop, I mean it touched 92,000. So nothing significant, still held that support level. And this was on news that the United States was cleared to sell $6.5 billion worth of Bitcoin back from when they had seized it from Silk Road. Now, did they actually sell this or did they just transfer this to a separate wallet? It didn't quite hit exchanges. We'll see on chain later. But the Bitcoin and cryptocurrency market already back at 95,000 and bringing up the cryptocurrencies with it. So, with that, looking for more upside. We've got the markets currently flat. Volatility index is up. Oil is up on demand issues as well as some supply concerns with what's going on in the Middle East. And we'll talk about that in a moment as well. Gold holding above 2,700. So basically, it's created a new benchmark for itself. Silver is up above $31. That might be the last buying opportunity we had. I think we're going to have some more downside in some of these assets if there is indeed a drop, but we can't count on that at this point in time. So this is the futures looking a bit flat. Really, everything on hold. Most of this doesn't matter too much because when those jobs reports numbers come out, they could all be skewed. Now, the United States equity funds, meaning the stocks, are seeing outflows on caution over the Fed policy because of this 10-year yield beginning to go a little nuts. 5% is major, major overhead. If it does hit that, then things will get interesting, but it'll keep you up to date. Now, along with this, as I said, it's working as a wrecking ball. The British sterling sliding for a fourth day amid all of this bond market turmoil. This is the debt running now not just the equity stock markets globally, but now it is affecting currency flows as well as trades. Talk about that in a little bit. Now, we've got the options market. Now, this is the leveraged stock positions are positioned for the US Treasury yield to hit 5% in the near term. So, kind of looking into this, the debt market hitting that high rate, but what that will do is that's going to hit the institutions very heavily, namely the banking sector. So with our calendar this morning, as I was saying, getting the unemployment reports. Now we know the report numbers are going to be skewed. However, the market will react to whatever is expected because that's what happens. They'll float out a couple of Fed presidents later to speak if they need to manage this market. Now, this is just saying there's a bit of jitters as these reports going to come out saying they could make or break the stock market rally. This is all in anticipation of whether the Fed will cut rates or not, because they've kind of pared these down. Now, I'd like to switch over to a little bit of what is coming this very quickly. Here is the inauguration of the new administration in the United States. Now, US drives pretty much everything else globally as far as economy. Now, we've got as proof, all of these larger companies and executives donating at least $1 million more to this fund. Now, GM, Ford, Uber, Meta, Toyota, Google, Amazon, all of the tech giants, Microsoft, Tim Cook, notably Sam Altman of ChatGPT, and Dara. Now we've got Boeing also in this, and Chevron. Now these are all the lobbyist groups that they're kind of trying to get their position in, if you will. Now we've got the union for the dock workers and the strike that they had. Now they just made a port deal. They're saying that may shape future talks, and they are crediting Trump with this, that it sped that talk up. So that averted major issues in the shipping supply industry. So very good there. Now we've got Taiwan expecting small impact from the tariffs on the chip exports. Now they're quite smart about this. They're also playing into this. And while there's going to be tariffs, they understand how to work the production capacity and also the demand. So they're not too concerned about this. On the other side of the tariff wars we've got Trudeau from Canada criticizing the proposed tariffs with US business leaders, which really doesn't matter. He stepped down and quit. He's no longer in charge, so it doesn't really matter what he thinks about tariffs. So, with this, I want to step into business. We've got 2025 is going to be the year of mergers and acquisitions, not just for banks, but also for businesses. And I kind of went over this in the 2025 forward, and we're beginning to see this. They're talking about Zombie Mall, Star King Born. JCPenney was having severe issues. We're looking at going bankrupt. They merged with Forever 21, which is another clothing business in the United States, to bring them out of this issue. On the other side, we've got Macy's trying to deal with this by closing some stores across the United States. They've been in operation for many, many years, so this is signaling retail trouble. We've also got, aside from this, companies that aren't struggling starting to lay off more workers. In particular, with this is associated Microsoft, which I'm going to speak more about in a moment, as well as BlackRock. Now, this is just restructuring of what they're doing in order to make more profits forward. Now, as I was saying, with the yield going to 5%, banks are going to have major issues with this. And we've got this right here, key. Bank of America bond losses topping over $100 billion. And this is because of this spread now. They're already locked into loans that they've got out that are making much less than what they're having to pay for the new money in order to loan out. Now, the flip side of this, we've got home prices falling. Now, Miami leading this is the story. We've got real estate, in particular areas that are taking a major hit. Now, very locational, because in some areas housing's still going up. But as these housing prices drop, people will be more inclined to either selling rapidly, getting loans at these higher rates, or whatever needs to be done. So this could be the balance out for this, and we'll watch that forward. Now, back to Microsoft, who is firing and cutting jobs in the United States. They're investing over $3 billion in artificial intelligence, cloud expansion and trading in India. Now, they've pledged to train over 500,000 individuals before 2026, and they plan to train 10 million people in India with cloud and artificial intelligence skills before 2030. So if you don't see what's going forward with that company, who is heavily affiliated with ChatGPT and Sam Altman, we'll be talking about it again later, I'm sure. Okay, quick note about Tesla, because they're going to be in the news, both sides. They had recalls over rear view camera issues, but also for the positive side, they've got their newly designed Model Y, and they've also changed their pricing, trying to become, or stay rather, competitive in Asia. And we'll see how this works out for them in a bit. Now, over to the fires in Los Angeles. And this very sad thing again, we've got people losing their lives. So prayers and condolences going out to them. But there's a lot of mismanagement behind this, as well as some theories about how it started. But really, what we want to focus on is the insurance losses, because wildfire insurance losses totaling billions of dollars, they're already looking forward to how these issues are going to affect these companies. So the ratings agencies already looking at downgrading the insurance companies. They're saying it could spell an end to cheap homeowners insurance in California, and I'm sure that's all a matter of point of view as to whether they were cheap. However, they are going to cause some issues for these catastrophe bonds, as we call them, the insurance companies. Now, Edison is the power company there, and they are already being asked to preserve evidence for this, looking at taking some of the blame, although they're saying that they are not. But on this, their stock, EIX, Edison International, took a hit of over 10% yesterday, already beginning to recover a bit from that, but looking at that in the markets. I've got a few other things I want to go over, and this is how things are affecting Europe. Now, they decided to go on the green energy policy, and this has hurt them severely. Their 2024 wind capacity was less than half the amount they needed, and the cost to put in these structures for the wind really hurt them. Now, with the bonds, we've got the sterling, we're seeing sliding for a fourth day because of all of this, and a lot of this is on the energy. So oil jumping on concerns about more sanctions from the US administration, current administration, on Russia and Iran. Well, who does this hurt? Hurts Europe. The imports of Russian liquid natural gas hitting record levels because they're in a cold snap right now. So they need this gas from Russia in order to stay warm and fund themselves, because even at elevated rates, it's still less expensive energy than their alternates. So with this current administration pushing these sanctions, more sanctions, we've got the more word about them in the war, but Germany's trade surplus with the United States is also reaching record highs. This again is related to all of these trade imbalances with the dollar and currency fluctuations. Now, amidst all of this is Ukraine still, Germany talking about the Allies group, deciding the next steps if United States retreats. However, Ukraine is now still receiving euro $3 billion worth from the G7. So Europe's still being roped into paying for this war. Still looking at going forward, which I find really interesting. Now we've got talking about Greenland. Top Russian MP, this is the truth about why they want Greenland. Military, talking about it being a military threat to Russia. It is a gateway key to the Arctic. So both military exposure as well as strategic position for oil and natural reserves. That is what's going on behind this. Now, back to Ukraine, we've got the incoming administration setting a timeline of Easter that they want to do a peace deal in Ukraine. Now, if this happens, this would obviously shift quite a bit in this sector. We've got Kiev still hunting draft dodgers, dragging young men in, kicking and screaming, literally, to go fight this war. So with this, we've also got Zelensky now accusing United States firms of corruption. That's kind of the pot calling the kettle black, but he's saying they haven't received even half the funds promised due to the lobbyist practices by the American military. Well, welcome, number one, to the Cantillon effect there, mister, and number two, to the practices of political war funding and spending, because it's not as it always seems. And you got a guarantee more than trickled down to the actual effort. Now we've got on the other side the globalist intentions of the United States. House Republican bill paving a way for acquiring the Panama Canal. Now, the United States sold the Panama Canal under the Carter administration for $1, and it was actually more over treaties and agreements, and are looking to reverse that. Now, the incoming administration saying it is a key threat. There are a lot of deals. It looks like there is a lot of Chinese control surrounding it, and this is key import export for the United States. So anything going on with this does have major impact with these things. So with this, going to go ahead and go forward. I wish you all a wonderful trading day today. Sorry this went on a bit long. Got another interview, did yesterday, should be coming out today. So until I see you again, my friends, stay free.